Hey everyone, thank you so much for coming back to Money Mindset. In the last two videos, we discussed why you should start investing, what mutual funds are, and how they work. Today, we're taking it one step further. You've probably asked yourself, should I invest a big amount at once? Or start small and invest monthly? That's exactly what we'll talk about today. SIP versus lump sum. What is SIP? SIP stands for Systematic Investment Plan. It's a way to invest a fixed amount, like Rs 1000 or Rs 5000, every month into a mutual fund. It's like a monthly EMI. But instead of paying a loan, you're building wealth. The benefit? You don't need a large amount to start. It builds a habit of investing. It protects you from market ups and downs. This is called rupee cost averaging. What is lump sum? Lump sum is when you invest a large amount at once, like Rs 50,000 or Rs 1 lakh into a mutual fund. This works best when the market is low. You've received a bonus or sold a property. You don't want to track monthly payments. Real life example. Let's say Ramesh invests Rs 5,000 per month in a SIP for 10 years. Suresh invests Rs 6 lakhs in a lump sum at the beginning. If the market does well consistently, Suresh might earn more because his full money is growing from day one. But if the market goes down after his investment, he faces higher risk. On the other hand, Ramesh's SIP averages out the ups and downs and reduces his risk, even if returns are a bit lower. How to choose between SIP and lump sum? It depends on three things. Risk appetite. Don't invest lump sum if you panic when the market drops. Availability of money. Don't wait to collect a big amount. Start SIP if you can invest even Rs 500 month. Market condition. Lump sum works best when markets are low. SIP works in all conditions. My suggestion, combine both. Yes, you can do both. If you got a bonus or saved up Rs 1 lakh, you can invest Rs 50,000 as a lump sum and start a SIP of Rs 2,000 month. That way, you get growth plus consistency. Wrap up. So in summary, SIP lump sum, good for salaried people, good for windfall amounts, lower risk, higher reward, starts with low money, needs big amount upfront, great for beginners, good for experienced investors. At the end of the day, it's not about timing the market. It's about time in the market that builds wealth. Tell me in the comments, are you a SIP person or do you prefer lump sum? Or maybe you're using both? And if you like this video, hit the like button, subscribe for more personal finance tips, and share this with your friends. See you in the next one. Thanks for watching. Subscribe for more at Money Mindset.